Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Do you think we're pledging to you, Rob? Okay.
Yes, I feel very honored. Thank you.
Okay, call to order. Can I get a roll call, please?
Here.
Henderson. Wright. Rasmussen. Here. Rebo here. Doran.
Here.
Kruse.
Here. Okay. Special meeting was called by myself, Jason Kruse, to address the following business items. I wanted to get an audit report from Mr. Brian Howell. He works with ADJOURN, and he was our auditor through this last audit. And then what we'll do after the audit report, we'll jump over to Mr. Rod Taylor. He's a senior government consultant. He works with Costerisan. I always get it messed up. Sorry, Rod. So we'll get over to him, and we're going to take a look at the budget and the things that we've done with our newly presented budget outline. And the consent agenda is as follows, then, from the board. The new general budget format is what I'd like to approve on the consent agendas, rather, and a new sewer budget format and amendments to the general and sewer budgets. So basically, by going through the consent agenda, after we review this newly presented budget, the amendments are embedded in the budget already to reflect the way that the township needs to go at this point in time. And by doing the consent agenda, we would consent to all of it. Now, you'll notice that in front of you, you have the general budget, and we're going to get that in a little shortly. But we don't have the sewer budget. Because the sewer budget, nothing's really going to change. I just want the board to consent to change the format over to the sewer budget, the same one we're seeing here. Make it much easier to read and easier to follow. So, without further ado, I wish to call up Mr. Howell, if you would, and present your report, please.
Hi, I'm Brian Howell from ADJOURN.
Oh yeah, just the button right there. Hit that. Sorry.
Yep. Okay. So I'll kind of briefly go over the audit report at high level and touch on some highlights and some reasons why things increased and decreased. So if you want to flip along, you're more than welcome to. The board members that have that blue audit report in front of them. First thing I always like to go over is our opinion letter, which is on page 1 of that report.
Can you guys pass one of those audit reports now, please? Okay, so page 1.
Page 1. So the first section of our independent audit report is the opinion section. So the second paragraph in that section states, in our opinion, the financial statements referred to above present fairly in accordance with accounting principles generally accepted in the United States of America. That's an unmodified, unqualified opinion. That's the best opinion we can give on some financial statements. So that's a clean audit report. So that's one thing I always like to go over first. And then we'll jump ahead. There's some sections we won't go over. We'll kind of just stick to the numbers tonight. So if we jump to page 15. This is the statement of revenues, expenditures, and changes in fund balance for the general fund. The third number from the bottom, you guys had a decrease in fund balance of $168,108 this past year, which brings your fund balance down to $423,102. A couple things to highlight compared to the previous year and what actually happened this past year during the audit is you guys had a large road project. You guys paved 205th Avenue. which cost $122,686. The prior year, when you're kind of comparing year to year, you only spent like $69,000 in roads. So that was definitely an increase compared to normal years. And I feel like some years you just do grinding and you don't have large road projects. So that's one thing that definitely assisted in that decrease in your fund balance this past year. And then the other one would be attorney and professional fees were obviously up as well this past year. So I think the combination of those two items made up the majority of that shortfall this past year. So that's really the highlights on the general fund. Other than those two, everything else seemed pretty consistent compared to the prior years. There's a couple things I'll highlight on the balance sheet. So if you actually flip to page 13, which is just before that, we have a couple things that are unique. One thing was some unearned revenue. There was $100,000 of unearned revenue. This is related to the reimbursement of GCT costs from a development agreement with Goshen. Based on conversations with township officials, none of this was actually spent as of yet. It was money received, cash received, but nothing has been earmarked as being spent to offset those funds. So that's why it's sitting there. So that's money you guys have in your bank account. Once you guys have expenses that qualify for that, those will be recognized as revenue as you have expenses to offset it against.
Okay, stop right there.
Yeah.
So unearned revenue means that it's revenue that comes into the township but is not registered, right? It's not, because it's not earmarked for spending. So it's not registered with the general budget. Is that correct?
Correct, yeah, it would not be in your budget because it hasn't been recognized as revenue yet.
And then just to back up one more time, just before we get down the road too far, I should probably turn this on, just to make sure everybody can hear me in the back. So basically the decrease at $168,000 was the paving of the 205th Avenue was about $100,000, somewhere around
$123,000.
$123,000. And then obviously attorney fees because of the situations that we're in. One, drafting the development agreement, and then obviously the lawsuit with Goshen, and then the changeover with the board, and then all the accrued costs for that. Okay. So that would just affect, that affects our bottom line then? I'm just going to play devil's advocate.
The $100,000?
Yeah.
Yeah, because it hasn't been moved to revenue yet. Until you actually have an expense that you say qualifies to offset it against, if let's say you had $5,000 of attorney fees, you said, hey, this qualifies against this, then we'd move $5,000 from unearned revenue over to revenue on the income statement then. And then it would be picking up with income at that point in time.
Okay, thank you.
Yep. And then on that same balance sheet, another item I would like to point out is under the fund balance section. So we said fund balance is at $423,102, but it's broken down in three categories. One is non-spendable for prepaid expenditures. That basically means you guys have some prepaid expenses. Typically, that's like insurance, stuff like that, where the period of coverage doesn't match up with the fiscal year. So you guys have paid for something that has a future benefit in the following year. So that is a portion of, you already spent that money. We just haven't expensed it yet, basically. So that's why it sits there. The next category is assigned for subsequent years budget shortfall. So you get original adopted budget showed a shortfall this next year for the 24-25 budget of $180,190. So that we're saying, hey, of this fund balance of 423, we're going to potentially eat into it 180,000. Now, there may be some amendments as the year goes on to tighten that up. If there was, one thing I just glanced at is, hey, you guys budgeted another $100,000 for a road project. Well, if you guys don't have a road project, you could amend that, and obviously that's a big chunk that would not, should not be identified here or would not eat into the current fund balance we have. So that's something to consider. And then we're saying the remaining $238,436 is unassigned. You guys haven't earmarked it for anything. So that's the balance of that total.
Okay, thank you.
Yep. And then your other fund that you have is the sewer fund. If you go to page 17, so since we're already kind of looking at the balance sheet at the general fund level, the statement of net position is the same thing, but at a full accrual level for a sewer fund. So a couple of things on this one is you have unearned revenue in this fund as well, $175,023. So this is your remaining ARPA funds that you have not spent yet. So originally, basically, that's about half. The first half was earmarked for towers that were put up. And so this is the remaining funds. So again, the money was moved. It was sitting in the general fund as unearned. It got moved over to the sewer fund because originally it was going to be utilized for a lift station there. And I don't know what it's going to be utilized for now, but it doesn't sound like that's going to be the case. So that money is sitting in the cash account on the balance sheet, has not been recognized as revenue either. It can very easily be moved back over to the general fund and be obligated for some expenses in the 24-25 year in the general fund or the sewer fund, whatever the board decides. So, but that's another big liability on the books that will show up as revenue once you identify it as having an offsetting expense. Because it is sitting up in cash currently. So that's kind of, and then down at the bottom of that page, your net position is $886,997 in the sewer fund. Now this one's a little different than the general fund. Your capital assets actually get reported on this balance sheet. It's more like a business set of books compared to the general fund. That's a modified accrual set of books. So it's a little unique. So the first number, $452,706, that is just your capital asset portion of the net position. Really, that unrestricted portion is the more important. That's like the money you have to spend, money, receivables, less payables, basically that you have to utilize to spend in the sewer fund as of right now. And then if we flip to page 18, so this is the statement of revenues, expenses, and changes in net position. So again, kind of like your income statement. Third number from the bottom, you had a loss or a decrease of $1,112, so very close to a break even. Your net position ended, like we just said, $886,997, built up of those two different components. But one thing I do like to point out, proprietary funds are unique because they also have depreciation, some non-cash items in there as well. So if you look at page 19, we're required to do a cash flow statement for sewer funds. And the first section, the top half there, where it totals at $670,314, which is your cash at the end of the year, you did have an increase of cash from operating activities of $66,300. That's just looking at the cash coming in and being paid out. And your cash did increase $73,868 this past year. So even though from an income statement standpoint you have about a break even, you are adding to your cash balance each year. And a lot of that has to do with some non-cash things like depreciation and stuff like that do not affect.
Can I stop you there really quick? So on increase, is that, do you think it's a fair increase from on our sewer budget, or do you think it needs to be larger, or are we increasing well, do you think? How does that work?
Yeah, your cash is up. There's some things that also play a part, like due from, like the general and the general fund, like if they paid something or received something, and the money didn't actually change hands yet, which I think was a little bit of the case here. But no, I think, you are adding cash. I think if you just looked at purely, hey, we had a loss or a decrease of $1,112, if we just back off depreciation, which was approximately $23,000, I'd say, if we looked at it the same way you looked at the general fund, you actually made money at that point. If you're looking at just cash inflows and outflows. So I think that is, you're heading in the right direction. And really, usually, you look at that unrestricted, you have unrestricted at 434,291 of that net position. That's good, that's pretty good. Once you start getting under a couple 100,000, 200,000 or less, I'd start looking at that closer and saying, hey, do we need to increase rates? Do we, need to set more money aside for future repairs, replacement, improvement, stuff like that? So, but as of right now, I think your sewer fund's in pretty good shape.
In relationship to sewer fund being in good shape, how do you view our general fund budget?
General funds, okay. I mean, obviously, with the original budget being adopted showing $180,000 loss and you only have $423,000, that's concerning because you only can do that 2 years and it's gone, So I think that's something you guys will have to tighten up and see, hey, what's inflated on this budget that we can, or what costs can we start cutting in this budget to tighten it up a little bit? I think some of it's going to be utilized with that ARPA money, potentially that Goshen money. I mean, so you have $275,000 that could help build that fund balance back up, or at least offset expenses that maybe you wouldn't utilize with normal operating revenues, but you're going to identify them as being paid with ARPA funds, for instance. And you can do it with like a fire contract. You guys always pay the fire contract with general fund monies, where you could utilize ARPA money. So basically, identify it, use it. Well, that'll basically build your fund balance right back up by whatever that fire contract is, which is approximately $100,000. So there's some things you guys can do. You just have to make a decision how you want to spend it. And you are running out of time. Basically, you have till 12/31/2024 to obligate those funds, and then you have one more year to actually spend it. I recommend trying to spend it before that, just because if you have a contract and it somehow doesn't come to fruition, then you technically you can't re-obligate it after 12/31. So it's like, hey, I wanted to spend it for this, but it didn't happen, so I'm going to spend it for this. It's like, yeah, it's too late at that point. So I think you need to be very concrete on what you want to spend it on, obligate those funds, and try to utilize those as soon as possible.
So by tightening up the budget, what do you mean by that? By making sure that money is well budgeted, appropriated per area?
Yeah, exactly. And each activity level, work through those.
So what you're saying is that when we approved the budget, basically the shortfall was because the budget was set up that we approved. It was really fat where we weren't going to spend the money, and maybe lean in other places where we had to adjust, right? Is that, yeah?
Exactly. I mean, like that road fund, you have $100,000 for a road expense this year, and you're not going to do anything. So I would say in a case like that, that could be amended down, and adjusted, or move to a different category. If you're over in a different category, you can do budget amendments, which I know Rod's going to help you with that stuff. So
I don't want to lose this here. Go ahead. I think, what's that? You might want to plug in your PC. Don't mind if I do. Oh, my PC cord's back in the back. Sorry. Can you run me around the PC cord? It's in your office. Okay, sorry about that. We forgot one thing. But anyways, that's great. So does everybody understand that as far as the board goes? What we ended up doing is we were in a tight spot, right? So when we were in a tight spot, we came out, we rolled out that budget, we reapproved the old budget. But what ended up happening when we did that was we put money in places in the budget that we never intended to use. So therefore, it gets fast, the fund balance gets stretched out. And so what we need to do is tighten that budget up. You can correct me if I'm wrong by making sure our amendments are correct. And so, and that's what we're intending to do tonight. So we're going to make these adjustments.
yeah, and like for instance, we talked about those ARPA funds. If you guys did identify some items in the general fund you wanted to utilize it for in the 24-25 fiscal year, well, then you'd have a budget item that would be increase your federal revenue by whatever that dollar amount is, which would increase, what you guys had previously budgeted. So that's where you can see it at. You have 100,000 of fire contract, well, that's always there. So now we just added 100,000 ARPA up in the federal revenue line item, so which would offset that. So all of a sudden, that $180,000 projected loss went to like an $80,000 projected loss. So you guys can do that this year, and I recommend trying to identify and obligate those funds as soon as possible. I just don't want anybody to have any instances where you might lose the funds that could be spent, so.
So, just one question.
Yeah.
You mentioned a couple of times that 175,000 that was ARPA fund money that was dedicated to a lift station some of it can be transferred back to the general fund, used there?
Yeah, so you guys obligated, you never spent it on the lift station, so that's just money you guys earmarked, and you can change it and re-obligate it to something else.
I just want to clarify that. I mean, it doesn't make any sense. I thought the money had to be spent for the lift station. It can be if we want to spend it there, but, okay.
Now, if you do that, you need to have a contract in place by 12/31, and it can't change. Like, you can't, after 12/31 or 24, you can't change like contractors, because then all of a sudden that original obligation changed. You really should talk to your attorney about that. If you guys are gonna extend it to the 25 calendar year, you really should talk to your attorney, make sure you're obligating those funds properly, so you don't lose them, so.
Good.
Yep.
Thank you.
Did we move the money from the sewer fund to the general fund for your guys' payroll?
We moved the payrolls.
So like whatever, like you and Corey are now being paid all out of the general, that did get moved over to the, okay, I'm just making sure that
That's a good point, because when we took office, the one thing I could see is I knew that we're gonna have, we could have issues with the general fund by just looking at what I had available to me. And so I wanted to get those payroll expenses out of the general fund, because I figured, well, down the road, we're probably going to have to look at the sewer lift station, because we already were coming into these meetings and having a lot of pushback and input on replacing that sewer lift station. So I wanted to make sure that we kept it intact as best as we could. So that's why in the budget, that's why I went that route. So, but it seemed to pay off a little bit anyways. At least we got some expense off the lift station for future. I figure if we did it for a year or two, and after we get through this big hump that we're in right now as a township, then we can look at whoever's here or do whatever they need to do. They can look at putting it back if they want to, but,
So that's all I had to touch on the actual financial statements, unless anybody else has any questions. I can go over some of the management letters and a couple of other items.
Really one last thing. So Ryan, basically what you're telling us is that if we tighten up our budget, our fund balance will be just fine and we can move forward. We're not going to bankrupt the township.
Yeah, I don't think you're there yet, but you gotta look at this. If somebody saw, hey, we got 400,000, you're gonna use half of it next year, that's when people start getting concerned. So I think you do need to look at it, utilize those grant funds, potentially utilize those the funds from the development agreement if you need to, or if that's something you guys are doing. So you have funds available, so those are some options. And then, look at future projects. I mean, especially when you do have to tighten it up a little bit. Hey, when is the next road project? How are we going to pay for it? Is it 4 years down the road? Get with the road commission and start laying that out and get some estimates on costs and figure out how do we need to do a road mill? Are we going to pay for it with operating money from the general fund? How is that going to get funded? So that's the kind of stuff you got to look for. I mean, like a roof, at some point, I don't know if this roof's probably been replaced recently, but that's a big expense. So, I mean, that's the kind of stuff, those capital expenses that could be large. You guys need to kind of look and lay out multiple years and figure out how to pay for it. Hey, what are we going to cut here? Because it'd be really nice to kind of get that budget to show a surplus, so then we can start identifying and paying for some of those capital expenditures or road projects or something else that you guys feel is important.
Okay, thank you. Sir, you had something, didn't you?
Not right now. I'll wait till the account.
Anybody have any more for Brian?
You said we have until the end of December for the ARPA, is that what you said?
Obligate those funds.
Okay.
You said obligate to get on contract.
Yeah, yes, you need to have it on a contract, and I really recommend consulting your attorney to make sure whatever you do obligates those funds properly.
Overall, how would you rate this audit?
It was good. I mean, there's some comments I can go over too, the management comments.
You want to
base on those?
touch on that? That'd be great.
Yeah, it's, some of it's nitpicky, but, it's, obviously there's a change in hands here this past year, and there's some pain along with that sometimes, so I have two management letters. There's, which they're probably loose in the back of those audit reports. So there's one that says, communication with those charged with governance at the conclusion of the audit. So this is, we call it a 114 letter. A lot of it's boilerplate. First page, boilerplate. Second page, towards the bottom, we start to get a little nitpicky. A couple things with townships. The state basically lays out how townships function, who does what. One thing that we were not seeing is clerk and treasurer were reconciling on a monthly basis, and that's like one requirement. I don't think they even knew they needed to do that, tell you the truth. And so once we brought that up, hey, let's talk about it. So those need to happen. Basically, they can do two sets of books, compare, make sure they're recording the revenue, the receipt side properly, and the disbursement side, because each of them have a part in that. So that's why it's important to have that check and balance between the two. So that was a recommendation. Receipt books, there's electronic receipts in the computer system, but none of the actual support. I recommend, hey, if you have a remittance advice from state of Michigan or wherever, keep that, have a receipt book that's pre-numbered and duplicate, and make sure you guys keep that and keep it in sequential order. So that was not being done this past year. But there were electronic receipts. If we needed to, there was a receipt showing up in the computer system with a description of what it was. So, but I think we need to go that next step further with the receipt book.
Do you want the board and the treasurer and the clerk's office to continue on with paper receipts, even though we flipped over to cash receiving with BS&A, still do the
you can,
receipts?
if you're doing it with BS&A, I think you should just keep the support of that. You can utilize the BS&A cash receipt module, which is great. It's a great system. So I think that the only thing I recommend is, hey, if somebody pays you and they got a stub that says what it's for, hey, this is for the cell phone tower for this month, how do I know what month it is without having that support from the actual person who pays you? And there were unrecorded transactions in the general ledger. This has been corrected, but there, when we did get there were some that still needed to be recorded to get the cash reconciled properly. So those are kind of nitpicky ones on that level. So those didn't rise to the level of like a material weakness or significant deficiency per se. So that's the next letter that we have, is the independent audit report on internal control over financial reporting. So this one, there's a few things. The first thing, segregation of incompatible duties. So that's a lack of segregation of duties. You guys only have, you do have more than 2 people because you have deputies, but it is limited to a certain extent of how many people you guys have in the whole accounting process. Plus, at the time, there weren't being the check and balance between clerk and treasurer. This comment's been on there for years, and it's on probably 95% of our municipalities. So I don't anticipate this to go away. There's nothing you guys...
Why would you put that on for this municipality? Or why would we?
You're a smaller municipality, so typically the ones that have a payroll clerk on staff, an accounts payable person right there on staff, they usually have a clerk, treasurer, they have deputies, and they'll probably have a couple more people. So every person has a part of the accounting process. Someone opens the mail different than the person actually like taking the money to the bank, and a different person reconciles the bank account. So there's a lot of checks and balances that you can have with more people. So usually we'll see that with like if you have a full accounting staff and you're open 8 hours a day, 5 days a week. So you'll see it a lot with cities. Usually, sometimes we get that to go away, but I'm at one this week, and even the city has this same comment. They just don't have enough people to get away from this risk.
Okay, so, thank you.
The second comment also...
Yeah, I'm
sorry.
saying, so you compare it to townships similar in size of what we have. It's very similar in terms of deficiencies that are seen throughout that versus a township that has 40,000 people or something. Like
Correct.
That, right?
Yes.
We're talking 3,300 people in our township, and
Yeah. I'd say almost, probably every single one of my townships that size has that same comment.
okay, but we're not unique in that
No.
way. Okay. Thank you.
And really, this next comment, same way. These two go hand in hand. The next comment is lack of adequate controls to produce full disclosure gap basis financial statements. So basically, this audit report I provided you, we prepare it. Technically, I'll go some places like larger governmental units. They'll actually hand me this whole financial report, and I just got to slap an opinion letter on it after I do all of our audit procedures. So since we do that, which again, I would say we do that for most of our governmental units, we put this comment in there. The state kind of required it. They pushed back on us a few years ago and said, hey, if you're doing financial statements for you, put that in there as a deficiency. So, and I don't recommend you guys hiring, sending people for education to try to do this either. It's not worth it because it's a constant change. A lot of those GASB standards change every year, and it's really not worth your time for this, so. But again, I'd say 95% of our governmental audits have those first two comments. The next page, the third comment, utility receivable reconciliations. I feel that this is important. So basically, you have two different systems at the time that one receipts in your sewer revenues coming in and keeps track of your receivables. Well, it's not synced up with your accounting system. So when I look at my receivables here from the actual data, the software you use to collect sewer billings, it does not agree with your general ledger. That's an important process to sync those two, to record the revenues properly and to receipt it in and offset the collections properly and just make sure those two systems sync up. Now, I don't know the fact that you guys are going to BS&A, they might sync up going forward. They probably will based on, I think you have BS&A to begin with from the sewer billing standpoint. So that should be resolved. That should be resolved going forward.
That old system was probably archaic. The system we inherited.
Yeah.
And we got rid of it as quickly as possible.
Gotcha. Okay. The next one, lack of adequate controls to the timely record, process, summarize data. That's kind of a catch-all. So that's kind of back to, hey, there's some stuff not recorded. We need to do that. Make sure those bank recs are done. Was talking to the deputy clerk before we came here. They're reconciled. So they're back. You guys are back on track. So I think this comment will also be gone this next year if you guys stay on track with that. And then the last page, you guys had an unfavorable budget variance, so that was over a material dollar amount. So that is basically, if it goes over a certain threshold, we have to put it at this level as a compliance finding. I'll grab that real quick. And I think kind of back to, I don't even know if there was a budget amendment this past year, so I see you guys are being proactive, amending the budget, revamping the budget, so that's great. There's quite a few items that were over this past year, but I think the big thing was in those professional fees. Those were over, you had about 77,000, only budgeted around 18,000. So that was that material overage at that level. Other than that, they seemed reasonable, not over by probably material down. I think there's that one activity level that bumped you guys over to that comment. If it didn't go over by that much, you wouldn't have had that. So I think that one can be easily avoided as well this next year by doing this, these budget workshops and amending the budget and monitoring on a monthly basis.
Thank you, Ryan.
Do you recommend amending monthly, quarterly?
I think you need to monitor your budget to actual. Technically, you're supposed to amend the budget before you go over in a budget item. So if you notice that you're getting close on certain areas, you might have to do it monthly. A lot of people like to do it about twice a year, is what I see a lot of times, 2 or 3 times, but I see some that do it monthly, so it really just depends on the need and how tight you guys are and want to try tracking those items. If you need to amend it because you might be over, I recommend amending it.
This is a problem before with the board also, was it, or was it, did we ever get the thing done before?
There's been budget overages before, I couldn't say if it was a material amount or not, but we've had budget.
The reason why I bring that up to the board is because I'd like to monitor this thing as closely as possible. This thing being the budget, so as we go into our other meetings, we bring it up to the board, put it out there, say, hey, this is where we're at in our accounts, and instead of looking at profit and loss statements and just the checks, then we can do our adjustments right away. The board did do earlier, Resolution 2401, and I have it out in front of you, is the way that we are correcting our budget from here on out. So we can amend a lot, not in such frequency, but I don't want to get the budget where it's out of sight, out of mind, and everybody understands it's up front, and we can take a look at it, track that budget. But now we're going to amend by cost centers, and that's what we're going to do tonight. We're going to take a look at the budget. So, it'll be much easier to make sure we appropriate the funds so we don't jump over anymore. Well, really, it's like, let's not do this anymore, jump over. I know there was a couple things in the past they had problems with too, and we don't want to do that. So
Can we get like this from now on, instead of just the actual account balances of what's...
Oh, yes. Yeah, every meeting? Yeah.
Because then we can we can't tell where we're at if we don't have this.
No.
I can't tell what's
it's
in
not.
the checking. I can say, yep, we got the money, but that doesn't mean it's in that line item.
There's not enough there. It's just not working. And Rod and I have been working, and like Brian and I were talking, we want to get the board up to the audit, get through the audit, make sure we get some good hard numbers, and then build the budget out and make sure that we can tighten that budget up, because that's obviously going to help our fund balance show better and work better. So it's just been a process. So thank you so much for all your help, Ryan. I appreciate it. Yeah. Anybody else have any other questions before he runs away?
So per this resolution, it'll be done quarterly.
Yeah, if we need to, but I would like to just get it out there for everybody to see where the numbers are. Oh, here just we had a couple of questions from the public. Really quick before you take off, could you please address those questions, Ryan? I forwarded them on to you earlier, so I appreciate it.
I think we got a couple of them we took care of. I think the first one was the $100,000 under revenue liability, what was it related to? So we went over that. That was that development agreement that hasn't been utilized or spent or earmarked yet. How's the township plan to spend and obligate the $175,000? That's kind of up to you guys. You guys got to do some work on that. Originally, it was obligated for that lift station. I don't know the time frame on that and where that's at, or if you guys want to earmark it for something different. So that's kind of, we've discussed that as well. What events, actions have to occur in order for these liabilities, both of them to be removed? Basically, you guys need to identify, expenditures that qualify under those two agreements. You got a grant agreement under the ARPA, and then you got the development agreement with Goshen. Well, what is an allowable expense? You start recording that, then we can start freeing up that revenue and recognizing it as actual revenue, instead of setting it on the balance sheet as unspent. So those are those first three. Then the next ones are, the budget report showed approximately $180,000 a loss this next year. Without an increase in revenues, the budgeting spent will result in significant depletion of the general fund. Best practice required township boards to determine a safe minimum balance, which should be It's really hard with municipalities, kind of back to those CapEx expenses. Like, your normal operating expenses, everything was normal. There was nothing out of the ordinary. I think you guys could figure out what that safe minimum is, but you need to reserve for those future items. Where you're at right now is probably a safe minimum, but if you have these large expenses, like a road project, like a roof, like a the hatchery, down the road that people use for weddings and stuff. I know that's cost a lot of money over the years to keep up, so those type of things, you guys need to have a budget for and set money aside for that. So that's a tough one to tell, because I don't know what kind of future expenses you guys expect. But if everything was just as normal, none of that one-time stuff, yeah, you're probably got an adequate fund balance right now. But if you are planning on doing road projects 2 out of the next 3 years, maybe not, so that's something you guys will have to dig into with this budget process. And then that kind of goes back to what's the minimum general fund balance, and then given the current financial situation and expected future expenditures, what is the general fund balance projected to be at the end of the fiscal year ending March 31, 2025? Again, I think you guys got to tighten up that budget, what actually is going to happen, and that'll give you a better outcome of, hey, where are we going to be? Right now, if we just said, hey, based on what we adopted, obviously it's going to be $180,000 less than the prior year. I think you guys need to figure out how to spend those grant funds, if you're going to spend that Goshen agreement money, and then see what else expenses that you know are going to actually take place this next year. I think the budget's, hey, that's a shot in the dark to a certain extent at the beginning of the year, which needs to change on a consistent basis.
Okay, so, what do you guys think? Okay. Thank you, Ryan. Appreciate it. No problem. All right. Have a good ride home. Long day for Ryan. Excited for audit. So I guess that would bring us to Rod. How you doing, Rod? Thanks for
Doing great.
Yes. Can you hear us okay?
Yep, hear you perfect. Thank you. Can you hear me okay?
I can, yep. Can everybody out there hear Rod? Okay. So Rod is, once again, Rod is a senior government consultant. He's been working as our accountant, helping us work through the budget, making sure that we can tighten the budget up. Like Mr. Howell was saying earlier, make sure our fund balance works well, and then we can move forward, being very, very educated about budget. So I guess could you kind of enlighten us a little bit on what kind of steps we've taken here that you've led us down?
Yeah, absolutely. And I think the presentation you had before does compare really well with what I want to talk about this evening as well, and hopefully help answer with some more clarity some of those questions asked previously. But before we get into that, one of the focuses that we had here was to adjust the budget format that the board and the public normally saw related to the township's budget. And we had a number of goals and objectives in doing that. One, we want to make sure the budget is easier to understand. Budgets are very complex in local governments, and whatever we can do to simplify the format allows people to grasp those numbers even better. The second thing we want to do is increase transparency and enhance your ability to use the budget as a management tool to manage those resources. And on the transparency side is making sure that both you as the board as well as the public have a clear understanding about where the money's coming from and where the money's going to. The third thing is compliance with PA2, which is the Uniform and Budgeting Act. State statute has minimum requirements that you have to have in your budget. We want to make sure that those are included with your budget so you're compliant with state regulatory requirements. The third thing is the Uniform Chart of Accounts. This is another standard the state has that requires local units of government to use certain account numbers, and we wanted to make sure we reviewed those and updated those accordingly. At the same time, we wanted to simplify account numbers. You had a number of account numbers, and having too many accounts sometimes makes things unclear, and so tightening that up a little bit, I think, allows easier management of the budget. And the last thing we wanted to focus on, which is what we're going to talk about here in a little bit, is really refine your estimates that you had for your 25 budget. Reviewing those revenues and expenditures, as it is already said this evening, tighten those up to better reflect what you anticipate those revenues and expenditures would be at the end of the year. And so I know you guys have the budget document before you, but I'll just share my screen. Hopefully everybody can see that. And so I'm not going to go through this in detail, but again, the goal was the accounting software that the township uses doesn't really facilitate a format that met all of those objectives that I talked about previously. And so the format that we were able to put together does three things. One, provides some actual historical information that's easy to see so that when you're reviewing the budget, you can kind of analyze historical trends, as well as provide clarity in terms of what you're asking for in the future. We also did some things like adding notes. This is part of that transparency. It's difficult when you say something like, swamp tax, people aren't going to know what that is. And so by providing a description, the lay people can look at this and can understand it a little bit better in terms of what are we trying to do? Where's this money coming from? Where's that money going to? When we look at a budget, you really should have kind of three goals. One is obviously you're allocating resources. Everybody understands that the purpose of the budget is to allocate those limited resources that you have next year, so you want to accomplish that. But beyond that, a budget is the tool in which you implement your vision. As board members, you're trying to serve the public, you're trying to implement that vision, and the way that you do that is by adopting the budget that allows you to spend those resources to achieve that objective. And the last thing that we want a budget to do is we want a system that allows us to review and manage those resources. You ultimately have a fiduciary responsibility as elected officials. You're using other people's money, other people's resources, and part of your role and responsibility is to understand the budget that you had before and manage that budget on a proactive basis, not on a reactive basis. And so ultimately, we hope that this budget will help you allocate your resources effectively and efficiently, and ultimately positively impact the community. So that's the kind of the overriding goal and objective. The last thing I'll talk about before we get into some specifics is you need to recognize that while the budget's primary purpose, as mentioned, is allocating resources for next year, or in this case, this current year, because we're updating this current year budget, it's really a long-term document, right? Because the decisions you make today are impacting the future. And so when we talk about things like fund balances, we talk about doing new things or making changes, you have to not only think about how does that impact next year's budget, but how is that going to impact our community for the long term. As you know, once government starts doing something, it's very difficult to stop doing something. So when you adopt new expenditures or modify your revenues, it's hard to make those changes over the long term. So you want to always be thinking about how are these changes impacting our community, both from a financial perspective, but obviously a quality of life perspective as well. So, what are some of the changes that we did in the budget? I'm not going to go through everything. Again, you guys have the budget before you, but I want to highlight some of the key changes that we are making, not only in the format, but also versus what you originally adopted for this fiscal year versus what is being presented in terms of modifying the budget to tighten that budget up, as we said. The first one was related to taxes. Previously, you guys had budgeted about $129,000 for taxes for 25. Based upon your current millage rate and your current taxable value, we anticipate that closer to be $140,000. So that's a nice positive increase. Donations, we also increased those because you could proactively work and get donations related to the Goshen attorney fees. Those are monies that you've already received in your budget this year. We want to reflect those as revenues as well. Zoning is a new function that you've taken responsibility for, but that also brings some revenue. So we increased revenues for zoning by about $4,500. MEDC grants, there's a grant for the Stone Hatchery Park and about $22,000. So we've increased the revenues to reflect that money coming in. The biggest change is related to ARPA, and that was already talked about quite a bit previously, but there's about $175,000 that you guys have sitting in under revenue, and what we show in the budget is use of those dollars. I'll talk a little bit later about what my recommendations of what you should do moving forward with those funds, but those impact on the revenue side. The expenditure side, we don't have as many large changes here, but we did make a lot of small changes to individual line items. There are a lot more line items, and so we made changes, some, just a few $1,000s here or there. I won't go through some of those, but some of the changes we did make is within buildings and ground. You had budgeted $25,000 in capital expenditures. Looking that we only have about 5 months, 6 months left in the budget, it doesn't look like you'll have those, so reduce that to $1,000. Personnel services, that would include services such as my firm's time. You guys had budgeted about $350. We've increased that to about $20,000. Highways, that was mentioned earlier, you had about $108,000 budgeted for highways. Based on the current plans, we've reduced that to about $22,000. Your cleanup program, you had budgeted about $8,700. In reality, that program's already done for this year. You spent about $5,200, so we've reduced that. Overall, the impact really is shown if you go all the way to the bottom of the budget, and that is your revenues over expenditures. So for the modified or updated budget, based upon using ARPA funds, showing some increased revenues, increasing some expenditures, decreasing some expenditures, overall we're showing revenues exceeding expenditures by about $35,000. So adding to your fund balance, which is a very positive position. Keep in mind, though, that this is done by one-time expenditures, and that's the ARPA dollars. So if you were to remove $175,000 of ARPA dollars, the use of fund balance would be significant. Now, you have to balance that with that you also have a number of large one-time expenditures as well, primarily attorney fees. And so one of the things that you want to think about on your budget is whether or not you have a statutory, not statutory, a structural deficit within your budget. In other words, do your reoccurring revenues and your reoccurring expenditures match up, or are your expenditures greater than those revenues? If they are, you're going to continue to eat away with fund balance. Now, one of the concerns, and this was talked earlier on, was, what is the appropriate level of fund balance that you should have? And so, based upon the current estimates, your fund balance is going to end up at the end of 25, based upon these current estimates, at about 60%. Well, how does that stack up? Well, the important thing to note here is that in 2022, your fund balance was $626,000. And what we're showing by the end of 25, that's going to drop down to approximately $458,000. So about a $200,000 drop. Now that in itself is not alarming if it's planned and if it's known. The purpose of fund balance is for two reasons. You keep fund balance for unplanned, unexpected events. So the roof blowing off was an example that Brian had used before. So something that you don't plan for, you don't know that's coming, and all of a sudden you have a large expenditure. The other reason you have fund balance is to save up for things that you do know about. So capital purchases, large purchases that you need to undertake to save up. And so the question always becomes, well, how much money should I have set aside? And that's a difficult question, because if you have phenomenal budgeting where your revenues and expenditures are almost spot on what you estimate them to be at the beginning of the year versus the end of the year, if you have a great capital improvements plan, which you know what those future expenditures are, and overall you don't anticipate a lot of unplanned, unexpected events, you can have a relatively low fund balance. But without knowing that, or not having those status, then you have to be more conservative and have a larger fund balance. And when we look at the medians for townships, for general law townships, the median's about 151%. And for charter townships, it's about 125%, 130%. So previously in 21-22, you were right at the median of those other charter townships. But I will say that even though you're a charter township, when you look at our charter townships, they tend to be a lot larger than you guys are. So it's probably a better comparison to compare yourself to a general law township, which again has that closer to that 150%. So the concern would be is that right now, what I'm seeing is a large dip in your use of available fund balance. And so going forward, it's going to be very critical that even though this year, because we're recommending to use the ARPA dollars, you've stabilized that, in future years, it's going to be really important for this board to analyze those revenues and look at opportunities to raise revenues and increase revenues, because ultimately the recommendation would be is that you probably need to increase your fund balance slowly over time. And then also at the same time look at expenditures. Where are there opportunities to reduce those expenditures over time? Because you can't do one, you really got to do both, because there's no silver bullet at the end of the day. So where does that take us in terms of next steps? Well, first of all, let's talk about ARPA. So it was mentioned by Ryan from UHY, you guys have ARPA dollars that are sitting there under revenue. And the previous plan that the board would have was to use that money within the sewer system. I recommend that local units of government consider not doing that for a couple of reasons. One, ARPA dollars is one-time money. You're never going to get it again, right? Hopefully, the federal government never doles out this money ever again, because we see the consequences of it. And when you use that money, you want to try to use it to be transformational and, more importantly, impacting all residents. And so the problem by spending in a sewer system for the sewer dollars is that you're only benefiting those ratepayers. And those ratepayers are the ones that should be paying for the maintenance of that system, the repair and maintenance of that system. And so if you set it there, not all citizens gain the same benefit for the use of those dollars. The second thing, and it was brought up before, is that your fund balance in the sewer system is okay, all right? It's not excessive, it's not low. Frankly, you need to make sure you have a good capital improvements plan, and once you have that, you can then better assess whether your net position in your sewer system is appropriate. But again, my recommendation would be that that money should be spent in the general fund, which is why we presented the budget with those dollars. So how do you do that? Well, as was mentioned earlier, under the federal guidance, you have to obligate these monies before December 31st of this year. And obligate means you have to enter into contracts. So you can't simply say, well, we as a board are going to spend the money on XYZ. You actually have to have some financial commitment to pay those dollars. If you don't do that, if you miss this deadline, then you've got to give this money back to the feds. Nobody wants to do that, right? Because if you give it back to the feds, your citizens aren't going to gain the benefits from that. So the easiest solution to spend that money is to identify an existing expenditure that you've already spent the money on in your budget, and then that allows you to move that money from this unearned revenue that's currently setting in to an actual revenue within your budget. The impact of that is, as you can see from what we presented here, is that your fund balance then gets positively impacted, right? It's going to go up by that $175,000. And when we look at your budget, the easiest thing to identify that's a large expenditure is your public safety dollars. So you guys spend about $113,000 on public safety. And so under ARPA, to spend that money, you have to use it under allowable category. One of the allowable categories is revenue loss. And so all local governments get to take a standard allowance up to $10 million. In your case, your full amount, $175,000. And all they have to do is identify a government service. You spend it on a government service, which in essence is anything you spend the money on today. It could be employee salaries, it could be buying new vehicles, anything, and again, the recommendation would be in the general fund, that's an expenditure during the period of performance. So that starts when did COVID start? 21? So in March of 21 to basically now. So in other words, in your guys' case, the easiest thing to identify is these public safety dollars. You take 2 years of public safety dollars and you've spent that money on government service, and so now you get to record that money as a revenue. If you guys take that action, the advantage is now we've spent the money under ARPA. Now we no longer have to worry about this deadline of December 31st of this year. You'll fill out one more report come March of 25, and then you guys are done with the ARPA dollars. You don't have to worry about any more compliance issues or anything else. If you tried another tactic, which is say, well, we're going to obligate the money, we're going to spend it by the end of 2026, you had some complexities there that we won't get into, but again, I highly recommend all local governments should be spending this money before the end of this year, get it done with, and move on so you don't have to worry about that. So that's the first thing is next steps, record ARPA. The next thing is you guys already talked about this, and that's monitoring. As a board, you have that fiduciary responsibility. Make sure that every month you have a budget to expenditure report before you. You're reviewing that report to understand where money's coming from, where money's going to, what's happening in your budget. And as part of that monitoring, identify any accounts that start to run over. Now, one clarification for that is that when you adopt your budget, I believe you guys are adopting your budget, which most local governments do, by the activity. So what does that mean? That means that, in this case, if we look at professional services, it doesn't matter if, and in this case I'll pick on your audit services, that if you guys budgeted $4,000 and they send the bill and it's $405 $4,005, excuse me. That's over budget, right? But really what matters is the total department over budget. So you just want to manage and monitor that on a monthly basis. If you do notice any of those that are coming over budget, then you should do a budget adjustment. So you should either do a budget adjustment at the time that you're approving a contract, and if you know you're going to go over budget at that point, or during that monthly monitoring process that you should be doing those budget adjustments. The last recommendation that I have related to budget adjustments is set a meeting the last week and a half of your fiscal year. So just before your fiscal year is going to end, set a special meeting with the board. That gives you one last chance to print out that expenditure report, review all of those expenditures, look at any accruals that might be happening for money that you have to report back, and make any adjustments that 3 or 4 days before your fiscal year ends, and that reduces the probability you'll get that finding that you have this year related to your budget being over. So just an easy thing to do as one last item. And the last thing we've already talked about is that you really need to take a special look at your revenues and a special look at your expenditures and really have a critical eye on what types of changes and adjustments can we make. As an example, you guys have made the decision to take the responsibility back for zoning because that is going to benefit your community for the long term. Well, that creates an expense, right? Well, what are you going to do to offset that expense? Because it's a new expense, the board has not had that in previous years. You want to make sure that you have a mechanism to make sure that you can either reduce expenses in some other area or increase revenues in some other area, or a combination of the two to make sure that you can maintain that status quo of a healthy fund balance and healthy management of your finances. So that's a lot that I threw at you, but hopefully that paired well with your audit presentation, and I'll be glad to answer any specific questions.
Ready, Sarah?
I'm always ready. So the ARPA money, oh, we might have. So the ARPA money that's on here currently is now in the general fund?
After we approve it, and we'll go to slide over to the general fund. And what the idea is to find a place where we can utilize those ARPA funds so we don't lose them or get closer.
I'm just getting confused because it was in the treasurer, it was in the sewer fund. Now I just want to make sure that.
Ryan, both Ryan and Rod both urged us to look at that and to approve that, so we have more of a workability, mainly because like what Rod said is like we use the ARPA funds in that sewer account. It's only going to the people who are on the utility, and it should be a broad stroke for everybody that's in this township. I mean, there's a lot of other things that can happen, or needs to happen with the budget also, how we budget for those towers that the township has. It shouldn't be in the general fund at all, or any of that internet stuff that's going on here. It should be in its own separate budget. It's kind of like a utility. There's only a certain amount of people that are on it. And the old board, as well as us, has asked the question, how many people does it service? It doesn't service the whole township. It only services a few people that we haven't gotten an answer for. So it should be in its own budget, managed appropriately for that. Then we could find out whether or not the township actually can afford it or not. All right. So this breakdown, actually, with Rod helping us through and Ryan putting his input in on it and how the township needs to go forward. If you notice, the revenues are listed in green at the front, so you can see all the revenues, and there's also descriptions on the revenues. And then you get down to the other part, and it shows the expenditures that the township has. Now it looks like, and I'm going to add a little bit to this, but it looks like there's a lot of expenditures here, but it's just the line item that Rod kind of touched on earlier in the numbers regarding those expenditures underneath that action. Okay, so the action for the action would be I'm looking for my word, the activity rather, not the action, but like elections would be an activity, assessing would be an activity, clerks would be an activity, and then what the board does now is we can assign the number to that activity, and now the clerk's office and treasurer's office can go down and divvy that money out underneath that activity where see fit. What that does for us now is allows us to amend the budget without having to bring it forward every time that we have to move money to the board. And what that does is allows the board to pay bills much more efficiently and that sort of thing. But by keeping it close to the activity, we still have a cap. The board still has a cap on the amount of spending that can happen in the treasurer's and the clerk's office. So as you read through the audit and how this is set up, or not audit, I'm sorry, rather budget, revenues are all front, all in green, expenditures break down by activity, and then you can see what happens in that activity in the budget. So I think I'm pretty happy with it as far as the layout for people to see and read and understand it and digest it. The next thing I want to also touch on is the first few columns that you see after the activities. You'll see the blue dot, let's say, if you look underneath expenditures, Department 101, Township Board. Once you go past that blue, you'll see the first column, all right, and then the second column. Those are past years. But you'll notice there's two columns that are blank after and moving to the right on expenditures. You'll notice those are blank. Well, those are the previous 2 years that we don't have any data on since we changed over. We're working on getting that data, but it disappeared out of our books, and that was one of the things that we were having a tough time with transition. All right, so finding that data to pick up our budget and keep moving forward. That's why, and I wish I could have touched on this when Ryan was here. That's why when Ryan came in, he says, "Hey, you need to work these books a little bit, get some more data so you can see exactly where you're lying now." And they're working with us in order to get, capture some of that data back. We want to get those numbers back in there as best as we can, and move forward so we have some historical record. Once again, if you look at the 23-24, those are pretty accurate numbers there. They're the best we could get. That's why we waited this long in order to release these documents so we could have some historical data to look at to know exactly where we're at. I mean, we were feeling around. We were doing a pretty good job, but it was more like dusk than 12 high noon, if I can use an analogy there. So we were feeling around. We could get the budget under control and understand where we were putting it, but we really didn't have any data to really show and point where we were at. We also didn't have any footnotes. Moving forward, after the description, you're going to have a column that's going to have notations on it for any big capital outlay projects or expenditures. And the reason for that is so that we have further historical data so we can see how to set up a budget moving forward. This is things that weren't there beforehand. And these are things that we were trying to establish. Once again, just looking forward after we move to the next column, we have the 2024-25 budget approved. That's what we approved when we came out in spring. And then the activity is obviously the activity of the budget and the line items that we've had so far up to date. That's everything we have in our books. And then the 2024-25 requested budget, that's what I'm bringing up to the board for approval. What that does is Rod and I have looked through the budget and looked at it, and I've worked with Corey and Rob and Jillian, is we were trying to identify, okay, which way is this account really moving? Do we really need all this money here? We need to tighten this budget up. So what the amendments to the budget are actually in the requested budget, which is actually it would be an adoption of a new budget, which is requested. This action is requested by our legal team. So bring it forward, get your amendments in so you can keep your budget moving forward, and then do it all in a separate meeting. That's why we're doing this. So it's a secondary budget meeting. But that's how it reads out. So once again, in 2021, 22, 22, 23, historical data is not there, unfortunately, but you can kind of calculate it from the previous 2 years, the 2020 budget and the 2021 budget. Then you can kind of get an idea of which direction those line items are going in. Yes?
Can I ask maybe I don't know, it's ridiculous, obvious question? 2021, 2022 data missing. Was it deleted? Is it deliberately being hid? Or was it taken? What can we conjecture about when we came in to this office and when people continue to ask us, where's the data? I mean, if we can go back, I mean, how?
The 21, 22, 22, 23 was online. That's where I pulled all the data
That's where
from.
you
It's
pulled it.
just not in the,
It's not in the
it's just not in their system.
Okay, so what do we,
Well, and that's-
concluding that without, I'm not pointing fingers, or
Right.
casting blame, I'm saying, it's an obvious question, maybe why? Why is this data missing?
Well, and I didn't leave it off there to prove a point of any kind at all. What we're trying to do is before we load that data up on there, because I think that's what we're going to end up resorting to. You know, before we load that up, we want to get it off our books and check with the books to make sure that it's all set. Now Ryan does have some information that he holds at his place, you know, up in UHY, but not much. And so we're working on trying to, you know, recapture that stuff just to verify that the numbers are as close as we can get them moving forward, because it is historical data and it would be nice to see some of that. And if there is any notes, once again, there wasn't a lot of notes explaining capital improvement projects. And I really wanted to touch on what Rod also said about capital improvement projects and what it can do to fund equity. And I don't think, I think it's been missed by a lot of people out there in the public, right? So we have a separate budget for the lift station. We're moving forward with the lift station, right? We'll still continue to pay those fees moving forward with weight trim as we work on replacement of that sewer system. That's a separate budget, and I believe that budget is going to be able to handle it, the stuff that we have there already, the budget we have there already. But when you're looking at the general fund budget, we all want roads, and I sure as heck want roads too. But we really have to be very careful moving forward, like Rod and Ryan is saying. We have to have a capital outlay in place. So what we can do is we can say, hey, we're going to do these road improvements this year, and we also have some stone hatchery stuff, like the stone hatchery grant, for example. That has to happen like now, right? So there's some more stuff coming out about the stone hatchery. I just got an email from Tim earlier. So that has to happen. So we know that's a capital outlay that's going to come off the general fund. What that will do to our fund balance, it will collapse it from where we're at right now, and we need to be aware of that. So even if the board rolls over, I would hate to see anybody else come into this situation. It's a hard enough job as it is already, but be crucified for the way that the budget's operating. You know, once again, like I said earlier, it needs to be understood on what affects the budget. Well, before the general public needs to understand it also. So when we start to accomplish project after project and not let that fund balance come up, we're going to drain our accounts. And that's why I sent out, you can see the reporting data, we put it out at the last meeting, and I threw it out here in the board again. It's over here. You see the 200% fund balance budget in there, the reserve budget, and then we go down to 150%. And as Rod and Ryan talked about earlier, you know, you'll see it start to collapse. Well, I wanted to know what was collapsing that budget, like what were we involved with? Because I know there was capital improvement projects involved in that collapse of that budget. So where do we put our money? And I do have more of that data, and I'll release that to you guys can check it out. But I don't have it in front of me. I don't want to bore anybody furthermore with what we got going on in this meeting. But, you know, there are different capital improvement projects projects like Ryan was saying earlier, roads, there were road projects, bridge projects, there were projects that the bridge that we took down from Casman Academy and brought it over here, we had engineering costs accrued on that bridge also to see if it could reach across the river. There were all these different things, and they were, we were throwing money at different projects, but they weren't on a capital improvement project. So you had these compounding projects, which in turn sank our budget. So that's why Ryan and Rod are out here saying, now listen, you guys are okay, right? Would that be a safe estimate to say, Rod, and we're okay at this point in time?
Yeah, definitely. Part of the thing is that you guys understand that you're going through a transition. For example, a lot of the expenditures that you have within your budget this year are one time. You have my services. Next year, you won't need those services. You're setting up zoning operations, so you have consultants there. And so those are one time. But I also, my previous role was I worked at the state of Michigan in a regulatory capacity, and part of that role was identifying communities that either challenged operationally or physically. And so I come from a very conservative perspective of saying that, yes, while you're okay now, status quo would be a concern, right? And so you have to be very proactive on that. I will add one thing too. You mentioned the capital improvements plan. It's important to know that's required by statute. So the Planning Enabling Act requires you as a charter township, because you have a sewer system, that every single year you have to, technically, your planning commission has to develop and adopt, and the board by association, a capital improvements plan. And that capital improvements plan should cover all large expenditures, not what those minimum requirements are. So the minimum requirements is that has to cover a period, I think it's 6 years. I recommend that your capital improvements plan go out much longer than that, 10 to 15 years, and then include more items. And so I think that to answer that question of how are you doing, the more that you get some of those best practices in place, the stronger that you guys will be and have a stronger base to go forward and build upon.
I don't want to get off track here, but I do have a quick question for you regarding capital improvement plans. What does it take to create, I'm looking for the words here, but to create the most accurate, most effective possible capital improvement plan? What would that look like, Rod, just really quick?
So at a minimum, it's simple, right? At a minimum, it just needs to be a list with dollar amounts and years in those dollar amounts going out that 6 or 7 years by at the minimum. But to have a stronger tool, it's going to take some work. What I normally recommend is that you hire an engineer, because the engineer can go through and look at your township hall. Look at, the roof was mentioned earlier. When do you need to replace your roof? You guys have any idea? Probably not, right? And so by looking at that, the HVAC system, looking at your parks, all those other facilities, you can get a better gauge of what some of those large expenditures are. The roads are the biggest one that I'm always concerned about, because you can look at your assets and you can figure that out, but the roads are technically the county's assets.